Hey everybody, welcome back to the Thursday financial thing live stream where we talk about everything peer-to-peer lending, investing, stock market, crypto, and whatever else you want to chat about. Thanks for tuning in. Hope everybody is well. Everybody's having a great week. We got a lot to get through this week. We're going to be talking about the Trading 212 portfolio, which has hit its 1 year anniversary. And we're going to look and see what the final results were. And, as I said, I'm going to give away a portion of the profit that came from that trading account to charity. I got two charities picked out that are near to dear to my heart. And I'm going to show you what those charities are so you can see where that money is going to go. I should have pulled them up here on the website. And we're going to be talking about what's going on with the inflation problem. Yes, it is a problem. I've been talking about this for a while now on the channel, how inflation is a problem. It's not a transitory thing. It's something that is not going to go away anytime soon. And in the US, we have federal Mr. Jerome Powell stating, oh yeah, it's a bit more of a problem than I initially thought it was. And also Andrew Bailey in the UK saying inflation is now starting to concern and possibly an interest rate hike might come to combat that inflation. Yes, knew that was all, the situation. But finally, the people at the top are starting to acknowledge that situation. Let me pull up here, 1 second. We got that going. I'm going to talk a little bit about the House crowd and their administration situation, what's going on with that. We are going to talk about cryptocurrencies, a little bit of peer-to-peer lending news, and a bunch of different things this week. And don't forget, next week, October the 7th, we are going to have Louis Schwartz, CEO of LoanPad, here live and direct to have a chat with me, do a Q&A, and I'm very excited about that. And then the following week, Narinder from Kuflink is going to be here with one of his credit committee people, Natalie Weeks, and they're going to talk about risk and how they look at how they look at different loans and how they manage the risk and look at credit to decide which loans make it through the filter. So 2 guests back next week, Louis, and the week after Narinder and Natalie Weeks from Kuflink. So don't forget, sign up if you haven't already. If you're somebody that doesn't invest through Kuflink, you can get up to $4,000. That's £4,000 cash back just for becoming a new customer and investing into the loans. And remember, terms and conditions do apply. Your capital is at risk. This is not FSCS protected. So bear in mind. And you can go to the Financial Thing website. You'll see Kuflink banners on the site. Go to the cashback page. You can sign up directly through there. Please do that. They've been a big supporter of the channel and a big supporter of Financial Thing and the website. So we very much appreciate Kuflink for doing that. And if you can hit the thumbs up right now, just hit that thumbs up so I don't have to keep bugging you through the next 50. How long we got? 52 minutes. Yeah, right. Maybe we'll get finished within an hour. Doubtful, but who knows. Let's say a quick hi to everybody. Hi, Paul Bagworth in Kenilworth is first. Mike Powell in Southampton. Stephen Hale in Wintry, Nottingham. Peter Vince in Leatherhead. It's raining everywhere, it looks like. Soggy and miserable Aki Chap in the soggy and miserable Accrington. Robert in, I'm sure, is very sunny during the day, but it's nighttime in Greece over there right now. Paul New in Stockport. John Morgan in a very dull, wet Swindon. Alan Lomas in Chesterfield. Alan Stratford in soggy Melbourne. We got Brian in Woburn, and Colin Perry in the Peak District, Dan Barber in Hayfield, Derbyshire, and John Day in Nottingham, and other people in the stream. Welcome. Thank you again for joining. Let's get right into the stream, and let's look at the Trading 212 portfolio. We had a great year on this portfolio, and I'm happy, in many different ways. I'm happy that I'm able to take some of this money and do something good with it, to donate to charity, I'm getting a thumbs down already. I wonder if that's because of the audio. I hope the audio is okay. Let me know if the audio is okay this week, because I know last week it was super echoey and I made a mistake again. But just let me know if the audio is okay, and I'm just going to proceed forward, because sometimes I can't always, I can't see the chat. I can see it right now. When I'm doing the screen sharing, it gets a little difficult. And George is here from Gillingham. Oh, hi, George from Gillingham. George from Gillingham. George from Gillingham. Gillingham. Try saying that like when you're drunk, huh? We do the good first stuff first. West Ham is on at 8 p.m. Yes, I will get the good stuff out the way. We'll run through things quickly right now. Here we go. Let's talk about the trading 212 portfolio. Here we go. Final result, we were at around £14,000 at the 1 year anniversary, late September of 2021. Remember, we started with £5,550, and that means that we made, what did we make? A little bit under about 8,500 on this portfolio. So my goal is to give away about £1,000 to charity of that money, and just keep investing the rest, and hopefully every year I'll be able to do that and keep growing this portfolio. It was something I thought originally I was only going to do for a year, but I'm just going to continue on with it. And you can see here we've had some really good results with the commodities, with the energy shares. Centris up 33%. We got Laredo Petroleum, which I know is down quite a lot today, but up general 70%. Lloyd's up 83%. Occidental Petroleum 17% in the green, and then Vermilion Energy up 38%. So we had a couple of negatives here. Tulo has come back a ton. I mean, this was down in the 18-19% in the red, so it's come back all the way to only 5% in the red. And then Palantir 11% in the red, and Facebook about 7.5% in the red. So not all winners, of course. You can see Microvision here 48% down. That was a bad one, but win some, you lose some. There is risk. And as far as who's going to get this donation, Forest Home Hospice is one of the places. This is where actually my dad was put into hospice when he had cancer at the end of his life, so I'm going to make a donation to them. And then also here in the US, a good friend of mine, Dr. Paula Donda, who has a foundation called Worldwide Healing Hands. She is a gynecological surgeon who travels to different parts of the world giving free medical care to people in underdeveloped nations. Some of these people will walk for days to get medical care from her, which is completely free, and she takes volunteers with her. It's very expensive to put on these trips, and I believe 25 to 30,000 US dollars per trip, but she gets to help thousands of people every time she does this, and it's just something that's really near and dear to my heart. If you want to check out any of those charities, if you feel like donating, Forest Home Hospice is the name down in Poole in Dorset, and then worldwidehealinghands.org. So they are going to get some donations as a result of this Trading 212 portfolio that has done really well. So thank you to the stock market for performing well over the last 12 months, and me being able to do that. So in the news, what do we got? We got Blend Network launches new development finance product. We talked about that last week. So they have launched that. They launched it, I believe it was this week. So they have a development finance product with up to 75% loan to gross development value and up to 90% loan to cost. Again, I'm not a Blend investor, but if I were, I'd probably take a look at this. And incidentally, I was checking around in Blend's website today to see if there are any actual loans available. It does take £1,000 minimum per loan, so these loans are not very big. You can see here £300,000 for this loan, 100% funded. This one $500,000, $350,000. So they're small loans, and that's the reason why they tend to get filled up quickly. A little bit bigger one here, 1.1 million, but absolutely nothing available in Blend. These loans go quickly. They're good loans. And on the secondary market, you can see here there is nothing available. On the secondary market, I would say that obviously if something does come up, it just tends to get snapped up very quickly. But one thing that's interesting, if you are interested in signing up for Blend, you want to have a poke around the dashboard. This is what it looks like. And on each loan, which I really like here, it gives you a good amount of information. For example, on this Bristol loan, you can see here rate 9%, which the interest returns on these loans are really good. 21-month loan term, and then you get a repayment after 15 months, which is each one of these loans tends to vary. Sometimes the repayments are faster, sometimes they're slower. But what I do like is it has a simulator here. If you look on the left side, you could put in the amount of money that you want to invest. So let's say you want to put in $5,000 on this loan, and it's going to tell you your interested estimated income payout of £844 if you're to invest $5,000. So that's a pretty good payout. And then it shows you here through the months what you'll get. And because this is a 15-month roll-up interest, so it does get accrued monthly, but you don't get paid until month number 16. So you can see here month 16. Hope you can see that. You'd start getting your interest paid back here. No capital paid back. You get your capital at the end, but you get your interest after month 15. So £41.95 a month if you were to invest £5,000, and then you would get on the final month 21 £5,631 back, which is all of the interest and all of the remaining capital. So yeah, it's a kind of interesting to run that simulator again. It's different on every loan. It really depends. You can see this one here is a repayment method, 12 months of rolled up interest. So the simulator on this one, you're not going to start getting paid back until month number 13, which is okay as long as you think the loan is good. And then it has a lot of information here about the security and then the financials of the development. So not bad, pretty good. And then documents are all here with the RICS valuation and the information pack on the individual loan. So I've always said, I thought Blend offers a very, very strong peer-to-peer lending product. I just don't have extra capital right now to invest into Blend, unfortunately. But if I were looking at putting money into a new peer-to-peer lending, for me, it would definitely be Blend. I'm certain of that. LendingWorks is going to boost its leadership team. LendingWorks, again, is one of those companies that I'm really just watching from afar right now. I started pulling out my funds there a while ago. I wasn't really happy about what happened during the COVID situation, how they handled things, but then they were taken over. So I just don't believe in taking risks that are unnecessary at this point. For the interest rate, I mean, you're only talking about getting paid a maximum of 4.5% a year. So is there some platform risk there? Probably. But they are hiring some pretty influential people. Not that that necessarily means anything, because we've seen things like that happen before. But they have appointed Graham Dodds as the Chief Product Officer from TSB, and Donna Quinn as Head of Compliance. Yeah, so again, keeping an eye on LendingWorks from afar. Now here we go, House Crowd Administration predicted to cost over £800,000. Here we go again, another administration that's going to cost an absolute small fortune. No surprise here, we've seen it happen time and time and time again. And I've looked over the reports here. This is the latest report that came out from the administrator, and there was a couple of interesting things here that kind of, one of them really pissed me off, but in the House Crowd Limited document, you can see, hopefully you can see here, they were talking about office equipment. Now, I don't know how much office equipment was there, but they wanted to dispose of the office equipment using the most advantageous method available to try to collect some money. And now it says in here, the Fraser Fund director of the company had expressed interest in purchasing this office equipment. And the administrators concluded that Fraser's offer was likely to represent the best net realization for the assets. And what was his offer? Here it is, £100. which they received in full on the 22nd of April. Now, call me crazy, but I would have thought that there would be more than 100 pounds of office furniture. I did visit the house crowd, and you can look at the video on my YouTube channel of the office tour. There was definitely some furniture in there, and I know used office furniture probably doesn't collect as much as you might think, but 100 pounds, that seems absolutely ridiculous. I don't know what the reason is behind that, but that's what they were able to get. Now, also here, you can see, if I can find it, I think it's on page 17, the costs of the administration on this piece was £421,995. That's for the actual costs incurred during the reporting period. So we're already up to that amount. And then on the other companies, if I'm reading this correctly, there is also the Housecrowd Property Management Limited, and they have incurred a bill of £133,190. And then third time's a charm, right? The Housecrowd Finance Limited, which has incurred £50,622. So you can see these administration expenses just keep on going up and up and up. And again, this is going to ramp up. I think £800,000 is a complete undersight. I think it's going to go over $1 million easy. So that's a terrible prediction. Of course, the administration's not going to predict $1 million or $1.5 million because everybody would be up in arms. So they're going to put a lower number. Not surprised. Let me get a drink of the green shake. Not surprised at all. Let's see. This is a report. Almost 2/3 of institutional investors and wealth managers from the US, UK, France, and Germany, and the United Arab Emirates are expected to invest in cryptocurrencies for the first time within the next 12 months. No surprise there. And yesterday, or a couple of on the 28th, you can see a story here. Morgan Stanley increases Bitcoin exposure. They bought 58,000 Grayscale Bitcoin Trust shares. So they're increasing their exposure. Now they've got, I think, 928,000 of these shares. So these institutions are jumping on board. It's just a matter of time as we see that institutional investment increase over time. We call that the network effect within cryptocurrency. The more exposure the cryptocurrencies get, the more the institutions, governments, countries are going to come on board. Of course, always risk involved. Now let's talk about what's going on with the inflation situation. Now I've been talking about inflation, and it's getting worse and worse and worse. The economy is not good. Everything is being glossed over. We had unemployment numbers in the U.S. released today. It was, I think, 360,000, don't quote me on that, new people filing for unemployment. And back in June, we saw Mr. Jerome Powell, who I think is a very evil man, but he brushes off fears of extended inflation. And then here on September the 29th, now he is frustrated and sees inflation running into next year. I mean, no big surprise here. This is what we've been seeing. Inflation is rising. If you look at the inflation numbers, you're seeing it everywhere. Everything is just getting more expensive now. The consumer price index in the USA increased 5.3% over the last 12 months. So things are getting more expensive over the last 12 months. And then in the UK, you see it here. And I don't think this is transitory at all. You can see here rose by 3% in the 12 months up to August 21st, up from 2.1%. I think these numbers are low. I think it's going to be more closer to 3.5% to 4%. So everything is getting more expensive. Inflation is increasing, and you just see all these news stories coming out. Jerome Powell says factors pushing inflation could last until next summer. This is going to keep going on, and what they're going to do is keep printing money to try to stop this, which isn't going to work. The supply chains are limited. I mean, if you are into computers and you try to go out and get computer parts nowadays, things like GPUs, very, very difficult to get. And you can see fuel shortages happening in certain places. Building supplies, very hard to get in the US and the UK. And it's just causing an issue. So, again, this is why I always talk about diversifying into cryptocurrency, not because cryptocurrency is the be all and end all or the answer to everything. It's just a diversification play that can detach you from what is going on with the government printing giant machine that is causing horrible problems. And this is going to come home to roost eventually. Unfortunately, it's going to hit the stock markets hard. Question is when. Who knows? We don't know when that's going to happen. Maybe the crystal ball will tell us. It's not looking like it's going to tell us today. It's still opaque, but this is going to come home to roost. In other news, this is a billionaire investor, Chamath Pala. I can't even pronounce his last name. Chamath Palihapitiya. He's a billionaire. He is actually a part owner of the Golden State Warriors basketball team. He sits on the board of Virgin Galactic. Very smart guy. He's put hundreds of millions into Bitcoin. He says cryptocurrencies are hard to kill. Everybody's worried about regulation. Yes, regulation is going to happen with cryptocurrency, but it's going to be so the government can collect tax on it. They're not going to try to kill it off, I don't believe. They're going to want to collect tax, and they're going to want to stop money laundering as best they can with it. So this guy has put hundreds of millions into it. He's one of many that have. I think this guy Chamath has been talking about crypto since 2012. He was a very early adopter. And then there was an interesting tweet that was deleted in Coinbase's Twitter account that says, Coinbase report, expect growth in crypto funds soon, and SEC approved ETF soon. So we've been listening to reports of when is the SEC in the US going to approve a Bitcoin ETF. And it seems like Coinbase may know something we don't. But once these Bitcoin ETFs come out, I fully expect the price of Bitcoin is really going to take off. September is a notoriously bad month for crypto. If we look at CoinMarketCap, we're going to see things will come back a little bit. But I fully expect next month, October, is going to be a great month for crypto, and I would not be surprised. You can come back and check on this message in 1 month's time, but if Bitcoin were to be between 60 and 65,000 US next month, by the end of next month, I would not be surprised at all. I mean, think about this. It was only a year ago Bitcoin was about 10 or 11,000. We're up to 43. We've seen some volatility today, sitting at 43,986. Dollars up 6.63% for the last 24 hours, down about 1.6% for the week. Nothing really interesting going on. It has come up a little bit in Ethereum, up 7.91%. But yes, I fully expect that Bitcoin is going to have a really good run October through the rest of the year. Now, let's take a look at what else we can look at. I wanted to show you what was going on in LoanPad. Since we are going to have Louis on next week, take a quick look at the stats. Let me just log in here and see what's going on in the live data feed, which I always find pretty fascinating. And it looks like still a live loan number of 107. That has not changed since last week. And nothing has really changed here. We've still got this interest fund covered of £24,819 spent on the provision fund, so that loan's still outstanding, but no real movement since last week. £38.3 million of LoanPad loans. So again, next week, come check out Louis Schwartz. He's going to be here live. I'm really super excited. I've been trying to get Louis on the stream for, I don't know, since I started doing this, and he just avoids wanting to come on because he's a nervous chappy, which is okay. What else we got here? Andrew Bailey. Here we go. We're talking about inflation. He's ready to hike interest rates before Christmas if inflation keeps rising. You probably got a couple of emails from banks like Marcus and Ford Money, if you're in those banks, that they bumped up the interest a little bit. I think it went from 0.4 to 0.5%. But yes, inflation is a problem. And Andrew Bailey knows that. So it's nice to hear them finally acknowledge that this is a real problem. Now, I've been getting a lot of emails this week about risk, and I put a post up on the Facebook group this week about risk and how, look, if you want to get return in investing, you have to take risk. Otherwise, you can stick all your money in a savings account and get 0.4%. You can lose. If inflation is going to go up to close to 4%, you're getting 0.5% interest. You're losing 3.5% on your money every year. Let's just say it stays like that for 10 years. Your money is going to become 35% worth less. So you do have to take risk. And there is risk in everything. We've seen it in peer-to-peer lending. We've had companies that have gone out of business. We've seen it in property. Property crash 2008 and 9. We've seen it in the stock market 2000, 2010, 2020. These big drops happens. Bitcoin, you're going to see that volatility. It's going to happen. So if you want to make returns on your money, you have to be prepared to know that there is going to be risk involved, and there is going to be some volatility in certain things. I mean, silver, we talked about precious metals last week. We saw, I think it was a 38% drop in silver prices when the market corrected in March 2020. Again, nothing is really safe. Gold, again, probably maybe the less volatile of them all, still dropped 6% during the market crash. And also gold has had crashes in the 25% range over historical time periods. So nothing is really safe. Your money's not safe. Peer-to-peer is not 100% safe. Crypto is definitely not. Stocks are not. So you have to really kind of look at the big picture and say, what am I going to invest in? Make sure diversification is part of your portfolio. Don't put all your eggs into one basket, but the risk is going to be there, whatever sector you decide to invest in. And if you look at my Trading 212 portfolio, I mean, imagine if I'd have gone all in, taken a crazy risk on this Microvision share or on Facebook or on Tullow Oil. You're going to have times where these things are going to go into the red. So being diversified is really, really important, not just in stocks, but also across your entire peer-to-peer portfolio. If you're going to do cryptocurrencies, be careful with that. A lot of those coins are going to be worthless at some point. I tend to stick to the top 10 coins if I'm investing. Ethereum, I think Bitcoin is going to be your safest bet as of today. As relative safety goes, you got Ethereum, maybe you could throw in some Cardano, some Solana. You got to be careful with those. If you start looking outside the top 10, you get into those very risky coins that you could see flash crashes of 50-60% if the market dumps. Eventually, some of those coins are going to be absolutely worthless. Again, risk. You can make some money. You can make big money on some of them, but you have to be very careful about where you are putting your money. So just wanted to mention that about risk today. Because, again, I have been getting a ton of emails about people saying, Bitcoin is too risky and da-da-da. I'm going to put my money into precious metals and blah, 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 blah. And I just, feel like it's necessary to point that out, that everything does come with a risk. So that's what I have for you today. I'm going to read through your comments if you have any questions about anything that you're invested in or that you're concerned about or that you want information on. And maybe we'll get out of here before an hour tonight, since West Ham is coming on at 8 p.m. for Robert, 8 p.m. UK time. I hope they win. Hi, Darren in Cambridge. Yeah, I'm excited about the charity thing. You know, it's always something I've wanted to do. I'm lazy when it comes to charitable giving. I'm going to tell on myself. You know, I'm lazy when it comes to that. I do donate to uh, Dr. Paula's Worldwide Healing Hands on occasion. Sometimes when I get that little Wikipedia email that says, we need money from you, I give them a donation. But in general, I've not been very good at that. So this really gives me a good reason to fight for this portfolio to do well and to be able to give back. So I'm super happy about that. I think a monkey could have probably made money over the last year, though, in the stock market. So I'm not sure that I necessarily did anything that was that great. I just looked at the different sectors and thought, you know, what is going to do well over the next year? At first it was tech, and if you've been following the portfolio, I haven't made a video in a while. I will do, I promise. I'm sorry, I've been lazy. But if you go back to the very early videos you can see the first one, we were very heavy in tech, and then pulled out of that, and then switched to oil and the commodity section. So there we go. Darren says, question, best platform for beginner trading? A few £100, maybe up to 3K, picking out individual stocks or specific sector funds. eToro trading 212, free trade. Yeah, I think eToro is a good choice. I think you got Tastyworks is a good choice. I would just go with whichever one is giving away free money to sign up for them, you know. But I've enjoyed trading 212. I think it's simple, it's easy to use. I'm mad at them because they stopped. They wouldn't partner with me as on an affiliate side, and I was using them. I was happy, and they cut me off because I send them too many customers. But I think eToro, and then what was the other one? Oh, it's totally interactive brokers, I think, is a good one. But you know, at the end of the day, it's really about fees. You just go with the one that's keeping the fees lowest. You might not get the best spreads. Trading 212, it's gonna cost you a little bit of money on FX fees, you know, currency changes and whatnot. But in the grand scheme of things, I think they're pretty all similar. But just make sure you diversify. Oh, and another email I got too was talking about my index tracker. You know, I've always been a big proponent of index tracker, and some guy emailed me, Lawrence, you always talked about index trackers and why are you trading? Why do you have individual stocks now? I said, you're right. But I do have a big amount of my retirement portfolio in index funds. That's not changed. And I just have now a percentage of my portfolio that I allocate to buying individual stocks to try to create gains in this market. And we are in a bull market right now. I don't see that changing anytime soon. I think we're risk on at the moment. As long as the US keeps printing money, the stock markets are going to do well. Of course, you're going to have short-term volatility. And if you see that US 10-year yield start to spike up, I think that's when we start to get concerned. If we hear things about interest rate hikes and the federal government start to talk about tapering and actually do it, maybe that's when we pause and say, what can we do differently? You know, there are some other sectors that we can move into. Would then gold be a good place to go? But right now I just see risk on. I see oil and commodities, maybe some banking stocks are going to be a pretty good spot for money. But just make sure you diversify if you're planning to try to play that game. Yeah, Robert said, I used to clear some office furniture many years ago. In a Luton van, I got more than £100 in one van loan. Yeah, I agree. I think that it just was ridiculous. Hopefully there's some story behind that. There's a reason. But from the administrator's report, it just looks like, again, investors getting screwed. Darren says, I really like to use some peer-to-peer lending companies, including Blend, PropLend, but because of the £1,000 minimum per loan, I can't diversify properly unless investing in 10,000 plus. I agree with that, and I think maybe Blend would be one of the companies that I might say that would be okay to not to invest that higher amount. Maybe you could take a stab at a couple of loans in Blend because they just have a really good track record of providing good loans. So maybe the risk isn't as high within that platform. Again, PropLend seems to know what they're doing too. So I did actually consider just banging a couple of grand into a couple of different loans on PropLend and Blend just to do it. But I've been sinking more money into crypto at the moment as I see that opportunity there. But you got to make a decision that's right for you. Remember, it's risky. Mike says, Raj bought Funding Secures equipment for £500, I think. Yeah, 500 is about £100. Yeah, this is a great point. With so many young people maxing out on very cheap mortgage rates, we're going to see a very big problem when rates go up. I think that's one of the reasons why you actually might not see these interest rate hikes. And if they are risen, they may be 0.25% or something very small, because right now, the way the economy is, if interest rates were to go up, it would just create absolute havoc for many people that have taken cheap debt. You know, things like car loans, adjustable rate mortgages. Yeah, one thing about the US that's very different to the UK is in the US, when you get a mortgage, it's pretty much either a 15% or a 30%, sorry, a 15-year or 30%. Why do I keep saying that? A 15 or a 30-year fixed mortgage rate. So you can snag yourself 2.5%, 3% rates for 30 years. So those adjustments now don't really make a lot of difference. But in the UK, it's different. Now sort of 5 to 10 year fixed mortgages are more standard. So I think those rate hikes would really hurt the economy in general. Don't forget, if you haven't, please hit that thumbs up button, subscribe to the YouTube channel if you can. I very much appreciate it. It helps us, with the search and the algorithm. I do all this out of love, not for money. As long as I can do it, I will do it. I'll be here. Teacher Karen says we should ask the hamster for his predictions. Yeah, this is the what's it? The Mr. Gox hamster who live streams. Mr. Gox. Mr. Gox, is that his name? I forgot what his name is. Mr. Gox. He's outperformed the S&P. Yeah, of course he's going to do that short term. He's short term. He is always going to have a chance to beat the S&P 500. He's a hamster. It's pretty funny if you actually get on the live stream and watch it. He has a wheel. He does buy sell. But man, in a bad market, Mr. Gox is going to get absolutely crippled trading. Probably worse than the S&P. So the hamster as of the 27th of September has a performance of up 19%. It's pretty good. Gox Capital. Yeah, for anybody that studied crypto, there used to be a platform called Mt. Gox. It was MT.goxx that actually collapsed, and was some fraudulent stuff going on there. So that name is a little bit too close. Steven says central banks can't increase rates too high as the world is used to cheap rates and money printing. Yeah, I agree. I have a Coinbase account but want to buy some more via Coinbase Pro. Can you put a link on it? Yeah, you could just Google Coinbase Pro. I think I'll put the link in. you want to sign up for a Coinbase account, go to my cashback page on financialthing.com and you can get yourself, I think it's about £7 if you invest £70. Yeah, it's pro.coinbase.com. This is the website here. If you want to buy cheap crypto, it's very inexpensive here. 0.5% to trade. There are cheaper places to do it, but this is what I've been using for a long time. Comfortable with it. It's not very hard. You can look at the tutorial on my website if you want to learn how to use Coinbase. But do not buy crypto on Coinbase. I'll put the chat and the link in the chat. There you go. Yeah, I don't think interest rates are going to go up a lot. In June, Plan B is the creator of the stock to flow model. Currently predicted worst case Bitcoin close August less than 47 grand, September 43 grand. Appears to be on track. Yeah, he's been super accurate. He's predicting 65,000 by the end of October 2021. So he seems to be doing pretty good so far. Trick Cyclist, welcome to the stream. Thanks for joining us. Crowd property still a decent investment in your opinion? Yes, absolutely. I like crowd property. Yeah, Alan says it's decent, but it takes a while for your cash to get deployed. It does, because the demand for loan pieces is high. So there's a lot of investors, and not as many deals to fill all that money. So it takes a while to get diversified. Hi Lawrence, I'm sure you mentioned in a video a while ago about selling Neo shares. This may have been options or selling calls. Sorry, I can't remember what the details were. Can you go into this? Point me in the right direction. I think there was a live stream. If you go back, Mark, there is a live stream or a video that I did on options, like selling covered calls, selling puts. I'm not sure that selling puts is probably the way you want to go, but I do like selling covered calls. I do it. Let me see if I can find the video. You'll probably just have to go and search, because I'm not entirely sure where it is. If I find it at the end of the stream, I'll put a link up there. But yeah, it's basically you own shares and you can sell options. Oh, here we go. Yeah, there's a video if you Google it called Options Wheel Strategy. So let me go ahead and put that in the chat for you. There you go, I put it in the chat. Basically, so if you own the shares in a company, you can go ahead and sell an option on those shares at a certain price for a certain date, whatever you decide you want to do that for. And then a trader will pay you a premium amount of money in cash that you get straight away, and you keep that no matter what happens to the stock price. So let's say you hold, just example, Tesco shares, and they're worth £5 each. You can sell those Tesco shares as an option for £7 each for 2 months down the road or a month down the road, and the trader will pay you a premium of maybe, I don't know, £10 to sell him that option. So if the share hits £7, he can choose to exercise that right to buy those shares from you at £7. So you make the bump from the £5 to the £7. So you're going to get paid £2 a share profit, and you also get to keep the £10 premium. Now, if the share doesn't reach £7 by the target date, the options expire worthless. You get to keep the premium no matter what happens. The downside is if Tesco shares would have hit £10, you would lose out on the extra £7 to £10 jump. Otherwise, and then the other downside risk, if you decide you want to sell your shares and get out, you'd have to close the option out, and the option may be more expensive to close than £10. So, but if you're planning on holding those shares for a long time, anyways, it doesn't really matter if the shares drop in price because you'd be watching the price drop in your portfolio and you'd be hanging on to them anyway. So why not collect a premium to do so? Covered calls, I like them a lot. Prices obviously vary on the premiums. Obviously, the more expensive the share is, you're going to get paid in premiums, but the more it costs to hold the share. Really benefits people that have held shares for a long time. I mean, imagine if you had owned Tesla shares when they were $100. Now they're $700. Now you have shares that are worth a lot more. So you can sell covered calls, get really high premiums on things like Tesla shares or Amazon shares. And it's a great way to get monthly income. Covered calls. I don't do it on. I try not to do it on stocks that are really volatile, like NEO. I wouldn't do it on again. That was kind of just an experiment. Expensive stocks. Problem is things like Amazon. You got to have, at least in the US, 100 shares. I think it's more in the UK. It depends. I think there's ways to get around it through trading on a US platform like Tastyworks. But yeah, so you imagine if you had to have 100 Tesla shares in your portfolio to do it. That's, I don't know what Tesla is today, but let's say 700 US, you'd have to have 70 grand of Tesla shares in order to write covered call options. So it can get quite pricey, but you can also do it on less expensive shares that are priced less. Like, one of the stocks I do it on is Exxon, but about what, like 50 US dollars a share. So you need 5 grand's worth, but you can get paid on a weekly. You can sell it weekly. You don't even have to do it monthly. I think the premiums are about $30 a week, 30 US dollars a week, so $120 a month. So if you're going to hang on to the stock anyways, you get to get the dividend. And you get the covered call premium, and if it gets assigned, called away, if it hits your price target of higher than 50, say 52, you get an extra $200 on the stock increase. Yeah, a lot of people do it in retirement to get income. It's pretty good. Thanks for signing up through my links, by the way. If you did that, I appreciate that. Hi, Debbie in the Caymans. Hope you're all well down there, avoiding those hurricanes. I always keep an eye on those. Yeah, have a look at that covered call video. So John says crowd property auto allocations, that's auto lending, are from 2% to 15% max for me, depending on loan size and location. Seems to be about 1,800 auto lenders. So yeah, if you're a crowd property investor who has a lot of money you want to put in, it is going to take you a while to do auto lending. So you can try manual lending, but again, it's really, those loans do sell quickly. Can you do covered shares with 212? I don't believe so. I think you have to go to a proper trading. Well, not proper, not that trading 212 is not proper. But the thing about options, you have to get approved to be able to write options, because it is considered a margin call, which means that you have to have appropriate authorizations, because you are using you're not actually using credit because you're not doing it naked, if that makes sense. You're not you're actually owning the shares, but you still have to get authorized. Now if you want to sell puts, which is the other side of it, you have to have a margin account. So when you sell a put, you don't actually own the stock, but you have to be prepared to be assigned the stock at the price you choose, which means you got to have money in your account to cover, or margin or credit to cover the stock if it gets assigned to you. So riskier on that side. But no, trading 212 only does I think it's called CEFDs. And they do not, as far as I can see, you can't write covered calls in trading 212. I would look at Tastyworks. Tastyworks is a place you can do that. And I think maybe Interactive Brokers too. So yeah. Trading 212 is not particularly good for that. Mark B says he's planning on retiring early. Me too. I hope. Let's pray, right, that we can. Okay, we're gonna wrap it up this week, unless you have anything else. Back again next week, October the 7th, 7:30 p.m. UK time. Louis Schwartz, LoanPad, right here. Don't forget again, visit Kuflink, our sponsors. They've been good people to us, and they have finally filed their accounts. They'll be on October the 14th. We're going to ask them about why are they taking so long to file their accounts. We'll give them a hard time, find out what's going on with that. Make sure they do it properly for next time. Anyway, have a great evening. Oh, Darren, I wish you had a sign-up link for Invest and Fund. Anyway, listen, have a great week. Have a great weekend. Enjoy yourself. Be safe. Come back next week. Love to all. Love you guys. I really do. I appreciate everybody for spending time with me. It's very humbling that there would be people out there that want to sit and listen to me natter on about this investing stuff. So I really do appreciate it. And I'll be making those donations and very happy about that. So see you next week. Take care. Be well. See ya.